debt is available in the German market. Compared with other jurisdictions in Europe, it's not an issue. I would say that there hasn't been a huge change over the cycle. The debt's always been there, but now you have different providers of that debt. So if you take Euro Hypo, big lender, obviously owned by Commerzbank, decision to wind it all down, that operator's no longer there, but there are other people in the market who've come in to take up that space, in the banking area. So the banks are providing debt. What you're also seeing is that, insurers are also there. So Allianz are lending on property transactions, obviously at the top end of the range, the prime properties, they pick and choose. You also see pension funds lending, but again, specific transactions. But as long as the loan to value, is not too high, and I'd say up to a maximum of 50%, 40 to 50%, and you're lending with the right structure, I've seen all-in debt on a couple of transactions we've done lately on retail and logistics of around about 2%, so a margin of 90 to 100 basis points. Okay, if you haven't got the KAG structure, which is the tax-efficient structure, then you're probably going to be a bit more expensive, perhaps up to another 50 basis points. But I would say that with the right product, you're not going to have an issue in Germany with debt.
Okay, good. Marcus, are you seeing that?
Actually, I would add a little bit on that, because when we look for our funds, might it be office, retail or resi, if you're on the smaller cities, what increasingly the investors are, if you look for the local savings bank, the Sparkasse, they are quite happy to really invest, invest with you, giving the debt on the investment if the LTV is around 50 to 60%. And that's normally what the special funds are doing. But at the other point, you need to have the contact to the local Sparkasse network, because they are only operating in the local area. So you have to know in each city you have another person to talk to. It's not like if you have a pan-German investment strategy, then you really in every city you have to go to the small Sparkasse, to the local savings bank, and really ask for the people to talk to. But they can offer you quite attractive financing conditions, because they're happy to provide that for investments in their areas, because they're just operating in the local markets, and it's very hard for them to find any place to invest their savings they're getting in from the German savers. So they are happy to really give out loans on reasonable conditions. Most of the time the margins are below 100 basis points easily. So that's one of the places where you really can get financing for most property sectors on very good conditions. But you then need the network on the banking side. On the other hand, what you also hear about Germany with debt funds now operating in the market, I'm a little skeptical if debt funds can be competitive on the buildings they pretend to finance, because as we heard, insurance companies are in there, pension funds are already in there. So the margins are not that big anymore, and then if you're a debt fund, you also have all the documentation, due diligence and everything. So the question is, what type of return can you achieve with a debt fund? And that might not be that positive as a lot of people think they can get by a debt fund. So therefore there might be a little bit of a correction taking place in the next 12 to 18 months, that I believe, at least for the German market. Outside Germany, debt funds might be a different story, but inside Germany, I think there's enough capital available.